Hey there and welcome to the channel. In today's video we are going to be taking a look at the latest earnings for a company called Evolution AB out of Sweden, which is a company in the online casino business, mostly doing a live casino but also RNG games. Now I am an investor in the company and have been for some time. It is currently the second largest position in my very concentrated portfolio of only 9 stocks, and I was fortunate enough to be able to take advantage of the opportunity in October of last year when the stock went pretty far down. I believe it was trading at around 17 times EV to free cash, which is an absolute steal for a company that is as high quality as Evolution. Before October, I also had a position in the company, so I was able to average down quite a lot. And Evolution is one of those companies in my portfolio that I've been switching to for the last couple of years, to buying very high quality businesses at a fair price instead of buying okay businesses at very cheap prices. Let's start the video off by looking at the full year 2023 highlights, and as we can see here, the operating revenues increased by 23% from 1.4 billion euros to 1.7 billion. The profit for the year was over €1 billion from 843 in 2022, and the earnings per share went from 3.95 to over €5, and the dividend just keeps on increasing, went from €2 up to €2.65. The company has a goal of paying out 50% of earnings in dividend, which is a pretty high number, but they do have very high margins, and the company is run very efficiently by the management team. Now the board of directors and the management team has decided to take advantage of this probably temporary drop in prices for Evolution, and they have initiated a share repurchase program, and we'll go over that in more detail later in the video. The management team of Evolution is, in my opinion, very high quality, and Martin Carlesund is the CEO, with the CFO being Jacob Kaplan, and the management team has skin in the game, which is something that we like to see. And if you are interested in the company, I'd recommend reading the CEO comments and even going back a few years to see what he's been talking about. But as we can see in the comments here, the company has been adding to their impressive portfolio of games, where they added 110 new games to the portfolio and exceeded the target of 100 new games, which was set at the beginning of 2023. Now, building out studios for the live casino is very crucial for the growth of the company, and they did launch a new studio in Bulgaria, and they have already initiated the project to build a second studio in Colombia. And the company is planning on adding at least 4 new studios in 2024, in addition to expanding their existing locations. And here we can see an impressive growth in their operating revenues, which is the blue column from Q4 of 2021. And we can see the dotted line here, which is the EBITDA margins, which are very high and very stable, which is something that we love to see. The company has no debt to speak of, and at the end of the year they had cash and cash equivalent of 985 million euros, so they do have a very healthy balance sheet, which we are always happy to see. Evolution is a cash flow generating machine, and in 2023 they generated 1.1 billion euros in cash from operations, compared to 877 the previous year, and they did pay out 427 million euros in dividends, compared to 302 in 2022, and repurchased shares for 115 million. The next thing I want to touch on is customer dependency, which has been a concern for investors with Evolution, since they have historically been dependent on very few customers. And as we can see here, the top 1 to 5 customers in 2019 made up about 27% of revenue, and that number has gone up to 41% which is a bit high in my opinion, and the top customer, which made up 6% in 2019, makes up about 13% in 2023. Now, when you become as large as Evolution has become, I think it's inevitable to have few customers, few but very big customers. So I did mention that the company has been buying back their shares, and we can see here that they've bought back about 2 million shares since starting the program at the end of November. But that isn't a lot of shares, seeing that they had about 217 million shares outstanding at the end of 2023. But still, I do think it's very positive that the management team and the board is deciding to buy back shares, since in my opinion the company has been undervalued by the market, and I would like to see them stop buying back shares if the price returns to what it was before the stock price started to drop. But if we take a closer look at the income statement, we can see that the revenues from the live casinos have seen a healthy growth between 2022 and 2023, going from 1.1 billion up to 1.5 billion. But the revenues for the RNG keeps on struggling, and we're actually seeing a small growth from 268 million up to 275 million, which is not a lot, but it's still good to see positive growth. And if you look down here to the operating margin, we can see that the operating margin just keeps on expanding, going from 62% up to 63%. And one of the bear theses for Evolution has always been that they wouldn't be able to sustain those juicy margins. But so far so good, so as an investor I'm pretty happy to see that. Now unfortunately I went over all the earnings transcript, and in my opinion the questions from the analyst weren't that good, and the answers that the management team gave were pretty short. So I only have one highlight from the earnings transcript, which is some more color on how the development is between different geographical regions. And if we start with Europe, we can see a healthy growth, which for the full year amounted to 12%, which is good to see in a mature market like they have in Europe. And if we look at Asia, we can see that the growth there was pretty fast and amounted to 40% compared to 2022. And the revenue growth in North America is still pretty slow, or at least much slower than expected. But it's still close to 20% if you compare 2023 to 2022, which is good to see. Now one thing that I always do at the end of each quarter for my portfolio companies is that I go over the key ratios which I've set up in GuruFocus. Unfortunately, the guys at GuruFocus have been pretty slow to update the latest earnings for Evolution. I don't know if it's because they are a Swedish company or what's going on, but they still only have the September results. But if we take a quick look at the numbers for Evolution, we can see that they are pretty impressive. The growth in free cash is 58%, 3-year growth is 68%, and 5-year growth is 79%. They are still trading at a pretty fair price of EV to free cash flow of 23, which in my opinion is a good price for a company like Evolution. And we can see that the return on invested capital, the return on capital employed, and return on equity is all very strong. Now, like I mentioned, they have very juicy margins which have been expanding by 13% for the last 5 years, and their free cash flow margin is incredibly high at 59%. Like I also mentioned, they have a very healthy balance sheet with a lot of cash and no debt to speak of. But my problem with the company is that they've been diluting shareholders for the last couple of years. Nothing too serious, but still a dilution there in all of the acquisitions they were doing. But with the latest share buyback program, we are hopefully going to see a change in that. Now, the revenue growth has also been very strong for Evolution. Obviously, this number is going to go down to 20 once GuruFocus updates it to the latest numbers. But still, a very strong revenue growth for a fairly large company like Evolution, which has a market cap of about $27 billion. So, just to summarize this video, I am very happy with the latest results from Evolution. and Evolution is one of those companies that I love to have in my portfolio because you're not really worried about what's gonna come out of the latest earnings report, and it wouldn't even matter if you would only get an update on the company once a year. You just trust the management team to execute, and you do trust that any of the problems that will inevitably rise when you are running a business will be resolved quickly and efficiently. Now that is part of my long-term strategy where I will be focusing more on filling up the portfolio with companies like Evolution, and I already have some similar companies which just keep on performing, like for example Games Workshop, Fortinet, Adobe, and Meta. And I will be slowly rotating from companies like Alibaba and companies that just keep on disappointing the shareholders. And I do want to point out with Alibaba, it's not just the decline in share prices, which can happen to any company, it's also the execution or the lackluster execution of the management team and the decline in fundamentals that have bothered me with the company. But that's it for the video today. I do want to ask you to like and subscribe if you haven't already. Thanks for watching, and I will catch you on the next one.